What's up, Steve here. Thank you so much for being here today. I appreciate it, and I hope you're doing well. I wanted to jump into this. If you guys are buying pre-construction, new construction homes, or maybe you're currently into contract, I got some tips for you guys, especially if you guys are feeling stuck, especially with rates rising and so forth. I did a couple other videos on new construction. I'm getting these messages from certain people. One of them, Jacob, said, I'm under contract with a new construction loan in the Salt Lake area, and my payment has gone up $400, and I'm considering backing out entirely. I called the lender to ask them if I could lock my interest rate, and they told me yes for a non-refundable $2,000 fee that they could lock in 50 basis points higher than the current rates. I told them no because they weren't willing to refund the $2,000 if he backed out. And one other one, I'm currently under contract on new construction Georgia. I started the process with a mortgage interest rate of 4.35%. Couldn't lock because at the time I was over 90 days out from closing. The preferred lender by the builder mortgage interest ended up being 5.65% to lock, which increased my cost significantly. His payment started out at $3,200 roughly, and now it's $3,800. And I know that these people are not the only ones, and I've had several other messages in some of the comment sections as well as emails. Now, I'm a real estate broker here in Florida. I've been in real estate since 2003, owned my brokerage since 2006, and we've gotten exclusive rights for certain builders in Southwest Florida, and we even had model homes selling their products. So I kind of know how they work, but let's talk about it right now. See if you guys are currently in contract with a builder. I got about 7 tips for you guys, so let's jump into them. First thing is, see if the builder, before I get into this, it's important to know, and not all markets are the same right now, but certain markets are feeling a slowdown. And I think that if you guys are in contract, you might have a little bit of leverage if there is a slowdown. So first thing is, see if the builder is willing to buy down the rate, especially if they're feeling the squeeze. They might be willing to play ball. And the last thing that a builder wants is for you to back out, especially if they don't have other buyers in the wings just sitting on the sidelines waiting for people to back out. So it could be an opportunity for you guys to negotiate there. Many builders have an internal lender, and they kind of get you to utilize that lender because they're going to offer maybe some incentives, like they're going to pay for certain closing costs and everything else. Understand, the builder is making money from that lender. There's no doubt about it. All these builders have internal lenders. A lot of times they're affiliated or own the financing companies, and they make money on that loan. So don't be fooled. Now, it's important to sit down with that lender and exhaust all options and put it out on the table that you guys are having a tough time with the new interest rates, and it could cause you to back out. Because if you do back out of the deal, the person that's been working on your file, the mortgage broker or the lender that's been working on your file, doesn't make any money necessarily. So they have an incentive to keep the process moving along. The next thing is, go after you exhausted all of the options with the builder, the internal builder. Go outside of that mortgage company and go talk to outside lenders. Don't have them run your credit report. I mean, it's probably best that you just explain the situation. If you guys are on LifeLock or Credit Karma, maybe you can just show them a copy of your credit report, or at least tell them what the credit score is, tell them a basic income and expenses, and have them shop rates for you guys, because they might not be charging as many points up front, and also they might be able to get you into a better rate. The other thing is, and you probably don't want to do this, but maybe more inventory is coming to market within that community, and maybe there's a smaller option that you guys could look at. Maybe another house came available. Instead of spending, $600,000 for the house, maybe there's a smaller option for $400,000. If you guys are obsessed with that community and that product, that could be an option. Another thing is, you could eliminate any upgrades that you previously had. So if certain upgrades are not already purchased, preliminarily purchased by the builder, then it could be an opportunity for you guys to actually cancel those upgrades. So maybe it was, upgraded kitchen countertops, maybe it was a pool, maybe it was a big deck, maybe it was a finished basement. Whatever it is in your area, maybe you had all these additional upgrades that added to another $80,000. And when you calculate your principal and interest on another $80,000, that could be the difference in the payment that may make you more comfortable. So see if you can actually eliminate some upgrades. The next thing is take a look at your real estate market or the resale market. Even right now here in Southwest Florida, there's definitely more inventory coming to market. There's definitely price reductions. There's more inventory that's coming back on market. So things are starting to shift. And something that a community that you thought you could never buy into because there's no inventory, maybe that inventory is available now. So maybe it makes sense to go ahead and start shopping that as well to see if there's any inventory that you guys could actually buy right away. So that could be an option for you guys if you're able to get out of the contract, which is something we're going to talk about as well. The next thing also to touch on that too, depending on how far out the build is, you still might not be able to, in terms of CO, certificate of occupancy. Damn, I can't talk today. Depending on how far that's out, you still might not be able to lock a rate. So, you might have to bite the bullet and back out of this contract, find a resale property where you can lock your rate and close in 45 days. So it might make sense there. The next thing is review the contract thoroughly and look at all the back out options if this is a consideration. And look, I'm not here today to tell you to back out of your deal. I know you're probably super excited about the house you're buying. And trust me, I'm in no way telling you to back out of your deal. I'm just saying here are additional things to look at if you're freaking out and scared that your monthly mortgage payment is a lot higher than you're anticipating. So look at all back out options and also look at more so the mortgage financing contingency because if your payment gets too high, then that might mess with your debt to income situation and you might not even be able to get financing on the deal. And you might be able to get a denial letter written. Hopefully you have a financing contingency in there. And then show that denial letter to the builder and say, look, I just can't get financing on this thing. And hopefully you can get that escrow deposit back. Hopefully. And then the next thing and final thing is the builder contracts, especially the national builders, their contracts are pretty ironclad. So it's important that, look, even if you went and you hired an attorney and you brought a contract from like Lennar or D.R. Horton or Pulte, and you put that contract in front of an attorney and he started marking it up and you brought it back to the sales guy at the community you're buying in, that sales guy is going to say, the builder's not going to move forward with this. So they don't allow you to mark up contracts. Smaller builders probably will negotiate some terms and everything, but a lot of the larger nationals won't. So it could make sense for you guys to actually hire an attorney, pay maybe $300, $400, $500, have an attorney review it and see if there's anything you can do, especially if you're in a position where you really need to back out. It may make sense to, pay that $500 to try to go after your, $20,000 or whatever it is in escrow. It may make sense. And anyway, I think that's about all I got. I appreciate you guys being with me today. I really do. And hopefully you got value out of this. If you did, hit that thumbs up. And I will see you guys on the next video. Hopefully it's a good one for you. Thanks for being here.